Okay, Assalamualaikum and very good afternoon. So for today, I'll try to finish what we left last week, which is the topic of financial ratios. Right. So give me 1 second. Yeah. So last week, if you remember, we stopped until the second category of financial ratios. Okay, so we recap back a bit. Okay, we have 5 categories as I mentioned last week. The first one was about liquidity ratios, whereby we have 3 different types of ratios under liquidity, which is the current ratio, the quick ratio, and also the net working capital. Right. Next, we had leverage. Okay, leverage ratios. Again, we have another 3 types of ratios, which is debt to asset or debt ratio, debt to equity ratio, and the third one was times interest earned. Okay, times interest earned. So the total of 6 ratios we have discussed last week. Okay. So for today, we will continue with the third category, which is known as activity ratio. Okay, activity, or sometimes it also can be called as, right to write it here, as efficiency ratios. Okay, so here for activity ratios, you want to see how effective and efficient, okay, the manager utilize all the relevant resources. Okay, so you will see afterwards lah. There'll be a lot of ratios relates when we talk about resources. Okay, mostly we are talking about assets. Okay, so we want to see how efficient and how effective the managers of the company utilize the available assets in order to generate income for the company. Okay, so the measurement of income usually can be measured using the form of sales, right? So let's look at the types of ratios. So here we have another 5 types. Okay, another 5 types of ratios. We have the first one, average collection period. Okay, average collection period, or in short, we just call them as ACP. Okay, and then we have account receivable turnover, inventory turnover, fixed asset turnover, and lastly, total asset turnover. So we have 4 turnovers ratio here. Okay, so we will see some similarity between all 4 ratios with turnover later. Okay, so we only have 1 ACP, average collection period, and we have 4 turnovers, okay, under the activity ratios. Right, so let's look at the first one, ACP, average collection period. By the way, can you hear me? Boleh kan? Yeah, thank you. So first one, ACP, average collection period. So the keyword here is about collection. So when we talk about collection in the business, this is when we talk about when we do sales to our customers, okay, but the customers will be given credit, meaning they don't have to pay by cash. Okay, hence we will measure the credit sales, sales on credit. Okay, so the collection here refers to how long it takes, okay, for the customer to repay us the credit. Okay, so this will determine the average length of time taken by the firm to recover, okay, to recover or to do their collections. Okay, obviously when we talk about collections, the faster the better lah. We want to recover our debts, okay, from our customer as soon as possible. Okay, as soon as possible. So here you will see the measurement of of ACP will be in days. Will be in days. Unlike most of our ratios that we discussed last week is either times or in percentage, right? So this is the only ratio that we will measure it using days. Okay, and obviously the shorter the number of days taken, the better for their cash flows, right? So the determination of account receivable, because when we talk about collection, obviously it will affect the account receivable of the company, because when we do credit sales, the amount of sales, as I mentioned last week, the amount of transaction will be recorded under account receivable because we haven't received the cash yet. If the customer pay by cash, then the amount will be parked under cash. But here, since this is a credit sales, so the amount of transaction will be recorded under account receivable. So this account receivable, the size of it, the size of account receivable, will depend on three factors. Okay, first is the credit standard. Okay, how the company set their credit policy. Okay, credit policy, when we talk about credit standard, is actually credit policy, whether it's strict or lenient. Okay, so kalau strict meaning the amount of credit might be smaller because they are very strict with the customers, meaning not everybody entitled for credit. But for lenient meaning almost everyone can apply for the credit, then your amount of account receivable will be huge. So the credit policy or the credit standard will determine the size of account receivable. Secondly is the credit terms. How long actually you give the customer to pay, right? It can be 1 month. Okay. Some it may be in weeks, 1 week, maybe. So the longer the credit terms, meaning you allow your customer to pay later, for example. So the value of account receivable will be huge as well. Okay, so the credit terms will play a role as well kat sini. Okay, so the longer your credit terms, the account receivable might be bigger, right? That's number 2. And lastly, the collection policy. How you follow up, how you chase your customer to pay. Again, this is go back to whether you are very strict or lenient. So if you are strict, then your collection might be faster. Okay, but if you are too lenient, then your customer might delay the payment again. Okay, so again, if the faster you collect, obviously the smaller the amount of account receivable and vice versa. Okay, so in terms of the ratio, the formula, to calculate the ACP, average collection period, the formula is quite straightforward. Like I said, when we talk about collection, we cannot go away from account receivable. Therefore, we have account receivables here, account receivables, and we divide with daily sales. Okay, now, if you remember when we look at income statement last week, we discussed about sales or income, okay, in the income statement. Okay, but for this ACP, we need to know the daily sales. So how to get the daily sales? All right, so there are 2 ways how to calculate this ratio. Either you have the sales, you divide with 360 here. Okay, so this is one way to do it, meaning if I remove the word daily here, it's basically account receivables divide sales divide 360, meaning the sales amount you have to divide by 360. Or alternative formula is basically the same thing, but what you need to do is account receivable divide by sales. Okay, just take the sales from income statement, but you multiply with 360. Okay, so this is alternative way to calculate the account average collection period, ACP. Right, so for me, myself, most of the time I will use this one because it's much easier because similar like previous ratios, what we need to do is to find the information directly from the statements. But like I said, we have to multiply by 100 to get in percentage. But now, since we are calculating in days, so what we need to do is just multiply with 360. So if you want to remember how we calculate the ratios.
Sorry, sir.
Yeah.
Is it multiply or divide?
For this part, yang the alternate version ni, you multiply.
Multiply with 360.
Kalau yang this part, yang the original one here, you divide the sales volume only. Okay, I'll show you afterwards. Let's look at what example.
Okay.
Right. So like this was discussed last weekend, the Sunrise Corporation. Okay. Enlarge it. All right. So we need the account receivable. Okay, the formula is about account receivable yang ni, this part. Oh, why I cannot write all of that? Okay, so we need this account receivable, 830,000, and we need sales. This part, right? That's the information required for our ACP. So bear with me 1 second. Okay, I'll put it side by side like this. You can see. So yeah. Right, so we have ACP, I put it in short, average collection period. And the formula is, the first one, I put the first one there, account receivable divided by daily sales, like so. So if you use this one, what you need to do is to have account receivable, which is 830,000. Okay, divide with daily sales. Your sales is 7 million. And this 7 million, you need to divide by 360. Okay, so it is the matter of put a bracket in your calculators to find it. So for example, by 7 million. Okay, you will get around 42.7 or 43 days lah. Okay, 43 days. Betul tak? Okay, 43 days. Or alternative tadi, I said, you can use account receivable divide by sales times 360 outside. Okay, I don't divide here, not the denominator, it's outside. So meaning it will be the same amount, 830,000 divided by 7 million, but multiply 360. So it's supposed to be the same answer.
Yes, the same answer. So doctor, I want to ask if, because we are multiplying with 360, right? So what if the year is 365?
Oh, all right. So just to let you know, to make it standardized for everyone, in finance, okay, in finance, we will assume, right, the number of days would be 360 per year, meaning on average, okay, by the way, if you look back at the question just now, on the left, they mentioned you can use 360 day for calculation. Right, so yeah, most of the time for finance especially, I'm not talking about others, but for finance we will assume 1 year equivalent to 360 days. Not only for this topic, and throughout our topics later on, you will see when we calculate for annual amounts, we will assume the number of days will be 360. So please don't use 365 lah, walaupun technically it's correct, right? But we there's one term actually we use. I'm not sure whether you've learned this in business mathematics or not. We call them banker's rule. All right. So in banker's rule, okay, in banker's rule, we the calculation will be based on the denominator. Okay, the denominator always based on 360. Okay, but the actual days, okay, we might have to assume it is on actual number of days. Okay, so yeah, it's not complicated lah, but we have some justification why we use 360. Okay, so in short, just use 360 lah. And in fact, in the question also specify here to use 360 as part of your calculations. Okay, is that clear? Clear?
Okay,
So
doctor.
yeah, so it will be the same answer. So you can use either one. Okay, you can use either one. Both will be considered correct. Okay. So that's our first ratio under the categories of activity ratio. Okay, so as I said, the shorter the number of days, the better. So again, if you compare this 43 days and compare against the industry average only taken 40 days. And again, when you compare, always compare from the point of view of the companies we calculate, which is in this case, what's the name of the company again? Sunrise. Okay, Sunrise Corporation. So here we can conclude that Sunrise Corporation will have, okay, you can look at this area, okay. Okay, because the answer in this, so the higher the ratio indicate the firm might have a problem. Okay, not to say it is a big problem, but maybe you can say it has a slightly bigger problem in collecting debt as compared to the industry average. Okay, I recap, must comment always from the company's point of view, not the industry average. Okay, not the industry average. So that's our first ratio under the activity ratio. Now, if you remember just now I said we have 4 other ratios and all with the word turnover. Okay, let me back here. We have 4 turnovers here. Okay, just to get the idea of turnover. So turnover here can be referred as our sales. Okay. Turnover is basically the same as sales. So when you see the word turnover in these ratios, okay, so we have account receivable, inventory, fixed asset, total asset. So you can associate the word turnover with sales. So meaning there are 2 parts here, account receivable, then we have turnover. Okay, inventory, turnover, fixed asset, turnover, total asset, turnover. So these ratios, okay, the name of it represent the formula actually. Okay, so when you see total asset turnover, you know, okay, we need to find the total assets and we need to know the turnover as well, which is the sales. Okay, so the word turnover can help you to remember the ratio. Okay, but another thing, the word turnover, okay, the word turnover also can represent an action. Okay, when you read a book, you turn over the book, contohnya. It means you flip it or you turn it over. You flip it. So what does it mean turn over here? You have to flip the positions of the ratio. So meaning instead of account receivable, divide by turnover, because most of our ratios, in fact, all ratios, we have to divide in one item, divide with another item. So similar here, since you have 2 items, so in the sequence of the name of the ratio is inventory turnover or fixed asset turnover. So if you read from this, you may assume it's fixed asset divided by turnover, but ataupun divided by sales. But since the word turnover ni, another meaning there is to flip. This is just nothing to do with that, but just for the sake of us to remember the ratio, you need to flip the positions. Instead of fixed asset divided by sales, it's actually sales divided by fixed asset because we turn it over. Okay, so the turnover ni can represent 2 things if you want to memorize the ratio. Okay, first is the name of the sales tu. Second, the positioning. All right, so let's look at the first one, account receivable. So account receivable turnover. Okay, kalau you take directly from the name, you akan letak macam ni, account receivable divided by turnover, which is in this case sales. Okay, but since the word turnover ni, you ingat, okay, you need to flip it. So that's why the ratio will look like this. Sales divided by account receivable. Okay, so most of our turnover ratios, I said most, we look something like this, except only one types of ratio that we have to use something else than sales. Okay, only one ratio, but 3 out of 4 will have the same layout lah, in terms of the ratio. Anyway, let's look at the detail of account receivable turnover. So again, we refers to account receivable, just like what we've done in the ACP just now. So we need the account receivable amount. So when we talk about ratios in times, okay, X ni times, times. The higher the ratio, the better for the company. Okay, it means the company is efficient or effective enough to do something. Okay, so in this case is about collecting receivables. Okay, so account receivable turnover is actually the alternative way to measure how they do their collections. For ACP, the answer is in days, right? So we want to see how long, on average, they takes time to recover their debts. Okay, but if you want to see in ratio format, we can use account receivable turnover. Okay, so the higher the ratio, the better for this case. All right, but our question, okay, bear with me, I have to go back and forth between the questions. Since this question doesn't provide us with the alternative or an alternative reference for account receivable turnover, we cannot compare. Okay, we cannot compare, but obviously we can calculate lah. So for the sake of calculation, I put it here to calculate the account receivable turnover ratio. Okay, so the formula would be sales divided by account receivable. So the items basically the same as before, but it's the other way around, at least, and we don't have to multiply with anything. So it's 7 million divided by 830,000. So you get here about 8.43 times. Okay, but again, we don't have any reference to compare, so we cannot say whether this is good or bad. But according to our number of days taken compared to 40 days, obviously these 40 days will have better account receivable turnover, supposedly. It's supposed to show a better account receivable turnover for the industry average. So meaning this company's ART, account receivable turnover, will be lower as compared to the industry average, but we don't have to compare because we don't have point of reference. Okay, so that's how we calculate account receivable turnover. And this is how you comment. Okay, the higher the ratio, the better the effectiveness of collecting debts or collecting receivables. All right, so that's the second one under activity ratios. The third one. Okay, so this is the only ratio under turnover that we don't use sales. Okay, I said tadi, when we talk about turnover, we can associate with sales. But for this alone, under inventory, this is the only ratio that we don't use sales. Okay, but the rest afterwards, number 4 and number 5, we will use the same thing, the sales again. But for inventory, slightly different, slightly special. Okay, instead of sales, we will prioritize using cost of goods sold. Okay, because when we talk about inventory, usually we will focus on the costs. Okay, right, cost. So again, but the ratio, to read the ratios, again, the higher the ratio, the better, because we want to see how efficient the company manage their inventory. All right, so therefore, the formula would be, okay, even though I put all sales kat sini, okay, this is if COGS not given in the question. Okay, we will use sales ni if cost of goods sold not given in the question. But as I said before, most of the time cost of goods sold will be given in the question. So therefore, we have to use COGS as our priority for inventory turnover only. Okay, for inventory turnover only. Okay, so the ratio should be high because the higher the better. But if the ratio is too low, it indicates that the company has excessive stocks and unproductive inventories, and therefore it's an inefficient okay, kalau the ratio is low. So that's why the second bullet here specify that if the value of cost of goods sold is not available, then you use the sales amounts as a replacement. Okay. If je, if, right? But like I said, most of the time cost of goods sold will be given in the question. So therefore use cost of goods sold divide by inventory. So the position is still the same. We still turn it over. Okay, but the word turnover doesn't represent sales here. Okay, we need to use cost of goods sold. Okay, cost of goods sold nak tengok kat mana? Still in the income statement. Okay, just below the sales volume. upon the sales amount. Okay, if the sales is 7 million, okay, the cost of goods sold is 2.6 million. Okay, it's a huge amount. So if you use sales here, technically you are not wrong, but it will be more accurate, okay, to use cost of goods sold. Okay, please use cost of goods sold, right? So if we look for this inventory turnover, okay, so we use cost of goods sold divided by inventory. Okay, divided by inventory. So our cost of goods sold is 2.6 million. And our inventory, we can look in the statement of financial position. So the inventory is 400,000. So 2.6 million by 400,000. So you get 6.5 times. Okay, 6.5 times. And for comparison, yeah, we have inventory turnover in the question. This one, 8.4 times. So again, if you compare Sunrise Corporation against industry average, the inventory turnover for Sunrise Corporation is worse as compared to the industry average because it's lower, right? 6.5 is lower than 8.4. So therefore, the company has less effectiveness in using their inventory to generate sales. That's how we comment. Okay, Sunrise Corporation. Okay, I write for this and just recap balik how you utilize. Okay. In terms of comments, so you will comment after you do the formula ataupun the calculation. Kita lah Sunrise Corporation is less effective using inventory to generate sales. As compared to industry average. Right? Okay, something like that. So you calculate first, then comment. Okay, so that's how we do it lah. This is just a recap. Last week pun ada tunjuk how to utilize the comments below this as your tool or as your analysis portion, because the question always first part calculation, second part analysis, and you can use this as your guideline to comment on each ratios, because all ratios will be given this one line in terms of the explanation of the ratio. Right, so that's our third ratio. Right, so inventory turnover, I put a star or asterisk at sini, indicates that this is the only turnover ratio that we use cost of goods sold instead of sales. Right, even though alternatively you can use sales if COGS not given. Okay, but as I said, for sure COGS will be given in the question. Okay, so please use cost of goods sold. So that's number 3. Okay, number 3 under the categories of activity ratio. Number 4 and number 5 very straightforward, just like what we've done under account receivable turnover. We have fixed asset turnover. So the word fixed asset turnover. So we know we have fixed asset, we have turnover. So turnover equals to sales, and the turnover also means we flip the position. So hence the name or the ratio you can see like this lah. Sales divided by fixed assets. Okay, so here when we talk about efficiency, always comment on the two parts. Okay, how we utilize the assets to generate sales. Okay, kalau you tengok tadi, how we utilize the inventory to generate sales. Kalau ni pun how to utilize the account receivable actually to in terms of recovering the sales amount lah. Okay, but for this part, how we utilize the fixed assets in order to generate sales. Okay, so your comment will be commenting on these two parts. Okay, fixed assets and also sales. Okay, again, the higher the ratio, the better, more effective. The managers utilize their fixed assets in order to generate sales. Okay, and lastly, total assets. Okay, kalau fixed asset means just the fixed asset portion, not the current assets. For this part, we just pick directly from the financial position punya statement lah. Like this one Kalau total asset turnover, we use this part 4 million. Kalau fixed asset means we just use this part lah 2.14 million. Because the rest, if you remember, last week we aligned or we've defined the current assets is from cash until inventories. That's your current assets. And then net plant and equipment is your fixed assets. So to calculate the fixed assets turnover, we use 2.14 million. Okay, to calculate the total assets turnover, we use 4 million. Okay, and sales will be 7 million for both ratios. Okay, dekat sini lah. Fixed asset turnover. So you will use sales divided by fixed asset. So your sales 7 million and your fixed asset is 2.14 million. And you get your answer here for your fixed asset turnover. And for total asset turnover is sales again. We divide with total assets. Right, so still 7 million here. Your total asset directly take from 4 million. Okay, and you divide, then you get your answer here. Okay, but both again will not be comparable with industry average because the question doesn't provide us with any reference, so we can compare for fixed asset turnover and both also for total asset turnover. Okay, I'm not sure whether you are aware ataupun you nampak kat sini the trend of the question. For this question, we have 8 ratios. Okay, we have 8 ratios only. So far, if we recall, from the first category under liquidity, okay, liquidity we have 3, leverage we have 3, activity we had 5 just now. So far we have 11 ratios, right? The division of the ratios in the question, okay, if we categorize we have current and quick. Okay, this is from liquidity ratio. We have ACP just now at our very first ratio, and inventory turnover. Okay, these two. This is activity ratio. Right, and last week's ratio, another category, we have debt to asset or debt ratio, and also times interest in. So the pattern will be, if you see here, every category, there's a possibility of 2 questions only for each category. Right, so here would be leverage ratios, the debt ratio and also the times interest. So we left another 2 here, operating profit margin and return on equity, and both here is actually from our 4th category, which is under profitability. So that's why the question asks to compare or to comment the performance of the company based on liquidity, based on activity, profitability, and also leverage. So there are only 4 categories here. But in order to tackle all 4 categories, what I usually recommend, even though the question is A and then B, right? You do as similar like what I've done so far. like this one. I calculate the ratio and immediately I will comment afterwards. This is technically A and B or one ratio. And then I move on to the next one. So contohnya macam last week lah, I started with current ratio, I calculate it, and then I comment. And then I go to the next one, quick ratio, calculate, and then comment. In that manner, instead of I calculate this semua, and then the next one baru comment semua. Yes, you can do that as well, but to save your time maybe, right? Just do like what I did here. Just calculate your ratio, immediately comment. So every comment here, if you look at the marks here, we know we have 8 ratios, right? So for A, it's equivalent to 12 marks. So meaning, if we have 8 ratios, so one ratio equivalent to 1.5 marks. Okay, so if 8 multiply 1.5, then you get 12 marks lah. Okay, so these 12 marks will be given based on your calculation portion. And for these activity ratios, another 8 marks. Sorry, activity ratios. The analysis, 8 marks for all 4 categories. Right? So you see the pattern of placement is based on the categories. Kan? So usually what I will ask you to do is calculate according to the sequence so that you know it is in pattern. Okay, liquidity, the first two, and then ACP, activity for the next one, profitability and leverage. So comment in sequence, you write in sequence and comment immediately. So basically we have 8 ratios and every ratio equivalent to 1 mark because we have 8 marks for comments, right? So every ratio will contribute 1 mark. So meaning after you calculate this part to get 1.5, then you comment afterwards to get additional 1 mark. Yeah, so you can do it in that way to save time. Right? Instead of you calculate everything first and then you comment on the second page or on the third page even. Right? You can do it this way. Okay, you will be accepted juga. Okay, so let's move on to...
Wait, Doctor.
Yeah.
Can I ask question?
Yes.
Regarding the question, can you go back to the question before?
Okay.
Okay, so we have two questions, A and B. So A is the calculation of the 8 ratios of the
In
above,
the
is it?
question. So for every semester, these 8 ratios might not be the same.
Yeah. So basically the 8 ratios given there for A is like the calculation of the 8 ratios. Like we compare the given there and the sunrise, I mean the business.
Operation. Right. I recap later. The question will provide you with the reference or the comparison point. So the question will give you this, at least industry average. We have 8 ratios here. And as I recapped last week, this is not the answers. Okay, this is just a point of reference. You need to compare your answer, your calculation with these figures. That's number one.
So A is like the calculation of how we get the company's ratio.
The company's ratio that since last week, if you remember, I wrote in this whiteboard on the right side again.
Yes.
So those are the real answers.
Therefore, A is the calculation while B is the comment.
Yes, B is the comment, the analysis part. That's why the first is calculate, second is analyze. So analyze is this comment lah. You analyze what is this 6.5 means. Is that clear? Okay.
Okay, Doctor.
All right. So these 8 ratios, as I said, it can be random. Okay, but most of the time it will be given using these 4 categories lah: liquidity, activity, profitability, and leverage. Okay, because for example, like today, for the activity ratios, we have 5 ratios, kan? But only 2 will be asked like this. So it can be anything here. It can be total asset turnover. It can be fixed asset turnover, right? Depending on the questions. So don't look at this 8 and assume this is only the 8 will be asked. No, it will be random. All right, so you need to know all our ratios in terms of how to calculate. All right. Right, let's move on to the fourth category, which is the profitability. Okay, the profitability. If you remember, or if you recall just now in the question, we had the fourth one, the last category, which is this one, profitability. In fact, the question pun asked us to compare or to comment on the profitability side of the ratios. So since the name is profitability, meaning we will calculate based on the profitability of the firm. Okay, again, if you remember last week, when we discussed the income statement, okay, I mentioned about reference wallet last week, I can't remember. Okay, from the cost of goods sold, the operating costs and so on, we have multiple levels of profits, from the gross profit, from the earning before interest and taxes, earning before tax, and we have net profit at the bottom. So every level too, we can calculate the ratios under these profitability ratios. Okay, but most of the profits that we will use afterwards, you will see lah. Maybe out of 5 or 6, 3 or 4, we will use the net profit. Okay, but some we need to use gross profit, and some we might have to use operating profit or earning before interest and taxes. But anyway, these profitability ratios, most of them, the higher the ratio, the better for the company. Okay, so and so lah, why they need to measure this profitability. So we have 6 here. Okay, out of these 6, I put another star or asterisk at sini. This operating ratio, this is the only ratio that the lower the better. Okay, but the rest, the other 5, okay, the ratios, the other 5 ratios, the higher the ratio, the better the performance of the company, except operating ratio. Okay, don't get confused with operating profit. Here we have operating ratio. Right. So you can see some similarity in terms of the names of the ratios. Okay. For example, we have 3 margins here. Gross profit margin, we have operating profit margin, we have net profit margin. Okay, so the first part we have gross profit. So if you remember, in the sequence of our income statement, we have the very first level of profit, which is gross. After we take income, the revenues minus the cost of goods sold, we get the first level, gross profit. So yeah, that's our first level, gross profit. And then we have operating profit, which is the second level of profit after we deduct the operating costs. Okay, and we have net profit margin, which is after we deduct the interest and taxes. Okay, then we get the net profits. Right. So this is another ratios that the name of the ratio indicates the formula. Okay, just like what we had in the turnover just now. Okay, turnover, if you remember, I said it is based on sales. So here the margin kat sini, you can associate margin with sales as well. Okay, you can associate margin with sales. But if you remember turnover just now, we need to flip. Okay, we need to flip the positions of our formula. Okay, but for margin, okay, we don't have to do that. We just use, or we can refer to the question directly to calculate. Meaning, if you see gross profit margin, so margin equivalent to sales, so what you need to do is basically gross profit, you divide with sales. So for example, number 2, operating profit margin. So we can do, just take the operating profit and then we divide with sales. Similar like this part. Okay, so that's the difference between margin and turnover. Okay, if turnover, I recap, it is sales, but we flip sales on top as a numerator, and let's say fixed asset will be the denominator. Okay, but here, the position of the ratio according to the name of the ratio. Okay, so like so. Gross profit margin. So gross profit margin. So you just divide lah, gross profit divide by sales. You don't have to flip it over, just like what we had in the turnover ratios. It's very straightforward lah to remember the items in the ratio. So here, the gross profit margin measures ability of the company to generate sales using the gross profit. So the higher the ratio is more desirable. Okay, so the higher the ratio indicates higher contribution margin. Okay. So these ratios, okay, this is the first type, I think, if I'm not mistaken, whereby we use just the income statement. Right, if you remember, very first category, liquidity, we use all items in the balance sheet or the statement of financial positions. Okay, and then we move on to mix it between balance sheet and also income statement. Okay, but for this profitability, most of it we will use the income statement. Okay, so let's say we want to calculate. We have three margins just now. I put it here. Gross profit margin, GPM. Gross profit margin, which is gross profit divided by sales. Okay, so your gross profit is 4.4 million. And divide by sales, which is 7 million. Okay, so since margin, our measurement will be in percentage. You look at the question. This is another hint I also mentioned last week. If you cannot remember whether is it times, days, or percentage, look at the question. Okay, they will give you a hint kat sini. So here we can know whether to multiply with 360 to get days or multiply 100 to get percentage. If it's in time, we don't have to multiply anything. We just divide it. But since margin, gross profit margin, walaupun ni operating profit margin, so the margin is in percentage, so we have to multiply with 500 lah. So here you get around 62.9%. So this is the gross profit margin. Okay. Next we have operating profit margin, OPM. Okay, so again, remember the name margin here refers to first part is operating profit. So operating profit here, and we divide with sales, gross margin. So if you remember last week, when we want to calculate the times interest earned, we need to find the EBIT, earning before interest and taxes, or the operating profit. And based on this question, the EBIT, earning before interest and taxes, or operating profit, is hidden. It's not given in the questions. All right, so I mentioned last week how to find it, two ways to find it. Either you look from gross profit minus the operating expenses, which is 4.4 million minus 3.7 million. So you get 700,000. Or you take earning before tax and you add the interest part to get the interest portion inside the EBIT. So 580 plus 120, still you get 700,000. So it's 700,000 here, divided by 7 million. Then times 100 lah to get in percentage. So berapa 10%? Okay, 10%. Right. And lastly, the margin, we have net profit margin. Right, gross profit margin, the first one, operating profit margin, the second level of profits. Last, we have net profit margin. So net profit margin would be net profit divided by sales. So net profit, again, last week I mentioned the term they use, net profit, net income, or even earning after tax refers to the same thing. Okay, so the net profit is 440,000. Okay, 440,000. And our sales still 7 million. And multiply with 100. By 7. 440,000, sorry. 7. So it's about 6.29%. Okay, so you can see the progression from gross profit to operating profit and to net profit. The values keep on reducing. Okay, keep on reducing. So this is aligned with this income statement lah. As you can see lah, the values becoming smaller as you reach down until the net profit, right? So similarly, our ratio getting smaller lah from the gross profit, the level of operating profit, and lastly to the net profit, because we deducting all the expenses from top to bottom. Okay, so the ratio also getting smaller for every level. Okay, so from this question, okay, we can compare only on the operating profit margin, because this is only information given lah to compare out of all three margin ratios, okay, which is operating profit, which is this part. Okay, the company, Sunrise Corporation, has 10% operating profit, yeah, 10%, and the industry average has 8%. Right. Again, if you recall, so far what we've done from the liquidity, the activity, and even the leverage, everything indicates that the Sunrise Corporation is weaker or poorer as compared to the industry average. They had lower liquidity ratios, they had poor activity ratios, okay, and they had poor debt ratios, in fact, the leverage. Okay, but for the first category or the first type of ratio under profitability, there's better performance because this is the only ratio so far had a better performance as compared to industry average. 10% against 8%. Okay, so for profitability, as I said, most of it, the higher the better. So in this case, if we go back to operating profit margin here, like this, it shows that the company, which is Sunrise Corporation, has a better productivity in terms of their operations, okay, as compared to the industry average. Okay, so in terms of comparison, that's the only ratio that we can compare. Okay, but I showed you how to calculate the gross profit margin, the operating profit margin, which is earning before interest and taxes, similar name, and also the net profit margin. Okay, the net profit margin. Right, so we've done 3 so far. And I skipped one ratio just now, which is this ratio, the third one, operating ratio. All right, so this is the ratio, the only ratio. Actually, we still use sales, but instead of profits, okay, this is the only ratio that we refer to the expenses. Okay, so the indication here states that this is quite similar to operating profit margin, which is the second one that we've done just now, which is what operating profit. But instead of profit, we use expenses. So therefore, since we are looking at expenses point of view, the ratio should be as low as possible because we are looking from cost point of view. Okay, in business, we want to generate as high income or high returns as possible. And obviously, the lower the expenses, the better, lower cost. So therefore, since we are measuring the expenses, we want to have a lower operating ratio. Okay, I have to put operating expenses ratio. Okay, bear with me. Again, I have to go back to here. So if we look at operating ratio, so the formula would be operating expenses we divide still with sales. All right, so meaning all 4 ratios so far we've done all divide with sales value. So if earning before interest and taxes is 7,000, so the operating expenses will be this part, yeah, sales and admin expenses, which is 3.7 million. Okay, 3.7 million. We divide with sales of 7 million. Right. Again, multiply with 100 lah to get in percentage. So 3.7 divided by 7. 100. So it's about 52.9%. Okay, for ratios, I strongly advise you to keep it at least like 1 decimal, just for the sake of comparison. I can round up to 53 kat sini, yes. Okay, just sometimes I just keep it at 1, or sometimes macam ni I keep it at 2. two decimals. Okay. Yeah, or else you can refer to the question juga lah. Kalau question guna point, ada one decimal, you use one decimal. Kalau macam ni, you round up percentage, you can round up lah. I don't mind. Okay, so at least have a reference lah. So dalam case ni, operating profit is 52.9 or 53%. Okay, again, we cannot compare. We don't have any point of reference in the question. But we can calculate lah, 52.9% ratio. Okay, so that's our fourth ratios under the profitability. So I recap, we have gross profit margin, operating profit margin, and then we had the net profit margin, and we reverse to the operating ratio. All four using sales. All the margins, the higher the better, but for the operating ratio, the lower the better. Okay. And when we always say lower, higher, better, or worse, we always, in ratio, we always need a comparison. We cannot justify or analyze based on standalone figure. That's why when we don't have any point of reference, I just can show you how to calculate, but we cannot analyze, we cannot compare, right? So bear with me. So we've done all four, first four. So we left with two return ratios. We have return on equity and return on assets. So again, this ratio, we can guess the information from the name of the ratio itself. Okay, we have returns on equity, on assets. So return here, you can associate with net profits. Okay, net profits. So when you see the word return, you can, I said, associate with net profit. So meaning net profit on equity, net profit on assets. So from the name of the ratio, when you see, okay, net profit on equity, so meaning net profit on equity. Okay, or the last one, we have net profit on assets. Okay, so but the name of the ratio indicates the formula. So let's look at the first one, net profit margin. Bukan ni dah sudah dia. Return on assets, sorry. Okay, return, which is net profit, and then we have assets. So that's why the formula is earning after tax or net profit. Similar name, Similar, not similar name lah, I mean similar thing. Okay, net profit, we divide with total assets. Okay, total assets. Again, the higher the ratio, the better, which indicates the firm's return on the asset investment. So the higher the returns on assets, the better their performance lah, from profitability point of view. Right, and the last one, number 6, is return on equity, meaning net profit divided by total equity. Right, again, the higher the better. So if we go back to this question, I have to shift to this side lah. Let's see, we have ROA tadi, return on assets. So the formula would be net profit divided by total assets. So the net profit is 440,000. And the total assets, 4 million. Times 100 as well. Okay. All our profitability ratios, the answer will be in percentage. So 440,000 divided by 4 million. Times 100, so it's about 11%. Okay, this is return on assets. Return on assets is 11%. For the second one, return on equity, ROE, still net profit, but we divide with total equity. Okay, total equity. So net profit still the same, 440,000. But our equity, okay, so if you remember last week, I dah split these two. In fact, as a recap, maybe. last time. We divide this until here. This is our current asset. This alone is our fixed asset. This is total assets. Total asset kat bawah ni. And from account payable until other current liability is our current liability. This 1 million long-term debt is our only long-term liabilities. And these two, the bottom two, would be our equity. Okay, this is what we discussed last week. So to get the total equity, is basically these two lah, which is 1920. Okay, 1.92 million. Okay, multiply with 100. So 440 divided by 190 times 100. So it's about 22.9% or 23%. So if you, for ROE, you can compare because the question asks us to compare on return on equity. So the industry average return on equity is 19%. Okay, 19%. And for this company, they had about 23%. So again, the higher the better. Overall, the profitability of this Sunrise Corporation is much better as compared to the industry average because the OPM is higher. Berapa tadi? 12%. For ROE, even better as well, 23% as compared to 19%. And you can use, as I said, the comment below to make your justification. Okay, so here you can say Sunrise Corporation has a better return to shareholders as compared to the industry average. Okay. You can put the figures if you want as part of your analysis. The 23% as compared to 19 tadi 19% industry average. Yes, you can add that one if you want. So yeah, that's our fourth category of ratio, which is profitability. All right, so just to let you know, if we talk about exams, most of the time we're gonna use only the first four categories. Remember, we have five sebenarnya, but we will always use only four ratios when we talk about exam. Okay, when we talk about exam, which is these four: liquidity, activity, leverage, and also profitability. But we have another one, our fifth category, which is the market ratios. All right, so these market ratios, I can say 99% will not be asked. 99% 99.9% will not be asked in the final exam. Okay, simply because when we want to calculate the market ratios, we need more information. It is not just based on balance sheet and income statement. It's not based on statement of financial position or statement of financial performance. Okay, we cannot rely on the two statements alone. We need more information. So that's why for final exams or final assessment, I can say it's quite impossible to ask. They will not ask you the market ratios, right? However, okay, remember you have one assignment, group assignment, not task one. I hope you clear. We have two concurrently ongoing things that you need to do. First is the task one, I bagi tu. You just submit the the Microsoft Excel documents. Try to find as many as possible the GLCs according to the categories. Not to find only one or two, to find as many as possible. Right? And for the assignment part, okay, you may use the same industry from the first task too. Okay. But for the assignment too, you just need to pick two, kan? So don't get confused between task one and assignment. Okay. As for task one too, find as many as possible. But for the first assignment too, you just need to pick two companies from the same industry. All right. And that assignment, you need to calculate the market ratios. Okay, you need to calculate the market ratios. So therefore, I need to go through the market ratios as well. Before we move on to the market ratios, any question tak nak tanya? So ratios, that's how we do it lah, very simple. the format of the ratios, the way we calculate it, it's very straightforward. We need to find two items, okay, for every ratios too. Some you have to use the financial position, some you have to use the financial performance or the income statement. Some can be mixed, some from one statement alone, right? And yeah, that's how we calculate. So far, ada berapa dah? Liquidity 3, leverage 3, that's 6, and then we have 5 from activity, so 11, and then we had 6 for the profitability. So far we have about 17 ratios so far. So last one, market ratios, you might see another berapa, 5 or 6, another 6 ratios. So 17 plus 6 are the 23 ratios altogether. Okay, out of 23, 8 will be asked during the final exam atau final assessment. Selalunya lah, selalunya. Not sure whether this semester is the same or not. Okay, not sure yet. But I will let you know later. But most likely we will use 8. Okay, because one question usually 20 marks, right? So that's how we distribute the 20 marks, the 12 and 8. No? So therefore, usually we will use 8 ratios lah. Okay, not more than that usually. All right, so I think let's take a quick break. Okay, before we move on to the 5th category here, which is the market ratios. And these market ratios would be expanded in terms of the required information. Okay, that's why for the assignment later on top of the financial statements, the balance sheet income statement, you need to find other informations. Okay, but don't worry, the information is available online. They have everything that we need to know. Some of them still in the financial statement, but not actually in the income or balance sheet. You need to find, or you need to read the notes, for example. But some you have to go beyond the financial statement, beyond the annual reports. Okay, I will show or I will share with you later lah what are the informations required. So, as I said, let's take a short break before we move on to the market ratios. All right, let's continue with the 5th category, the market ratios. All right, so for market ratios, besides that, we need additional information. So these market ratios usually applicable for public listed companies only. Okay, public listed company, or in Malaysia usually it is under the Berhad company. Okay, simply because we need information that only Berhad companies have. For example, we may need to know what would be the market price. Okay, for non-public listed or for private limited companies, they don't have market price because they don't have stocks price, for example. All right, we need to know the number of shares, for example. So those only applicable for Berhad companies or public traded companies only. So that's why again market ratios cannot be calculated for private limited companies. So meaning for your assignment later on, that's why again I will encourage you to use only public listed companies, those with Berhad companies. Okay, yeah. Okay. So let's look at the categories. We have 6 ratios, as I said today. Okay, we have earning per share, dividend per share, DPR, dividend payout ratio, dividend yield, BVPS, again, we have per share basis, and the PE ratio, price earning ratio. Right? So let's look at the first one. Earning per share. So earnings, again, we can refer to the net profits or net income. So for net profit, no issues. We can get it from the statement of financial performance or the income statement. Okay, but we need additional information which is not in the income statement or the balance sheet, which is the number of common shares. Okay, number of common shares, also known as AKA, also known as number of shares outstanding. All right, so this information still we can find it in the annual reports, but not in the income statement. So usually where we can find this information, you need to refer to the notes. Okay, if you go to annual reports, you akan nampak, you know, the statement of financial positions, the income statement, and then you can see the cash flow statements, statement of equity maybe. There's one more thing, which is the notes. Okay, so you need to find it in the notes regarding to the number of shares outstanding. Okay, meaning you still can find it in the annual report, but not in the income statement or the balance sheets. Okay, so for this earning per share, the answer will be in ringgit, in RM, ringgit Malaysia. And the higher the EPS, the better the income per share this is. So here, actually, when we talk about earning per share, we want to calculate it per share basis, how much actually, how much actually you can earn. Okay, but this is not, we are not talking about the dividend yet. We are just talking about the net profit per share basis. Okay, so I cannot calculate based on the example earlier because we don't have number of common shares available. Okay, so that's EPS, earning per share. Right. Number 2 is dividend per share or DPS. Right, still per share basis, but now we use dividend, cash dividend. Right, so the name I put it differently, but number of common shares and shares outstanding basically refers to the same thing. Okay, number of shares outstanding ni, in short, we can put it as NOSO, NOSO, number of shares outstanding. So here basically is the same thing. This is also NOSO. So if you have, let's say here 1 million units, so here should be 1 million units as well, for example. Okay, again, the answer will be in ringgit. Right, the higher the ratio, the better, because it indicates that the firms believe that the growth can be sustained and therefore they will give out dividend to the shareholders. Okay, specifically cash dividend. In business, dividend can be given out as a cash from a cash point of view, ataupun from cash forms. Sometimes company can give out dividend in the form of non-cash. Okay, but here we just want to know the cash dividend, right? And cash dividend ni, we want to know the annual cash dividend. Sebab the cash payment usually they will pay quarterly, every quarter. So we want to know the amount of dividend per year basis. All right, so that's dividend per share. Okay, so where to get this cash dividend amount? It can be found in income statement as well. Okay, kalau ada. Okay, bear with me 1 second. I tak ingat kat mana I put it dalam notes ni. Sekejap, keep. Last time. Berapa tadi kita stop? 55 lah. Okay, 55. Bear with me 1 second. Kat sini stop. Can find it dekat part ni kalau ada dividend ni. So kalau kat sini you can find it here kalau ada. Cuma dalam case ni dia tak ada. Somewhere around here lah. Tengok dalam income statement of the company. After the net profit tu, usually they might put it the dividends. Okay, dividend to the shareholders. And the notes I mentioned tadi, you perasan ada perkataan, ada note kat sini kan. So perhaps if you want to know the number of shares outstanding, usually from the balance sheet. Bear with me again. So you can refer it here dekat share capital ni, contohnya dekat sini number 25 ni. So kat sini lah note number 25 with regards to the capital and equity, then maybe dekat situ dia tulis about the equity part lah, the number of shareholders outstanding. Okay, so we need to refer to the notes. Okay, so this numbering akan ada detail lah. So kalau cash and short term contohnya, when we look at note number 4 at the back, you can see lah the detail lah. And the cash and short term tu dia akan ada pecahan. There will be some distribution from this 2.65 billion ni. Okay, di billion. Billion ni dah million, so ada 3 zeros lagi. Okay, so you can refer to the notes, every single thing here, right, in details. Okay, so for number of shares outstanding, you need to refer to that notes lah. Okay, so let's go back to shares. Okay, so that's our second one, dividend per share. Number 3, we have dividend payout ratio. So dividend payout ratio, we use the first two ratios. Okay, DPS, dividend per share, and EPS, earning per share. So number 1 divided by number 2. Right, so meaning if you want to find dividend payout ratio, we might have to find DPS and EPS first, or since we have per share and per share here, so if we knock off each other, per share and per share, technically to find dividend payout ratio, right, we can use dividend divided by net profits. Okay, dividend, cash dividend divided by net profits. Okay, then we can get dividend payout ratio. So dividend payout ratio can be measured in two types or two measurements. One in ringgit forms, or DPR also can be measured by dividend divided by net profit. We can multiply 100 also to get it in percentage. Okay, this is alternative version. Okay, both are acceptable, whether to measure using ringgit or to use percentage. So both you can measure or you can explain the analysis at the bottom here. Okay, again, the higher the ratio, the better. Indicates how much earnings that they have to support the dividend payment. So out of a total, for example, macam ni lah, to imagine the DPR is very simple. At the end of net profit, okay, after you calculate all the costs, expenses, pay all the interest and taxes, then you get net profit. Okay, this net profit will be given first to shareholders in the form of dividend, and the rest of the money will be parked under retained earnings. All right. So if, for the sake of easier calculation, let's say the company earned 1 million ringgit net profits. Okay, 1 million ringgit net profits. Okay, and the company decided, okay, from this 1 million net profit, I will pay, I don't know, 200,000 dividends to the shareholders. So automatically we know when out of 1 million, 200 will be given as a form of dividend. So the balance of it will be parked under retained earning. So 800,000 will be parked under retained earnings. So therefore, based on these transactions, we can calculate the dividend payout ratio. So meaning the payout ratio, the dividend payout ratio is out of this 1 million, how many percent will be given in the form of dividend. So kalau kita tengok ni, 200,000 dividend, okay, divide by net profit of 1 million. So 100k divided by 1 million, you get a 20%. So kalau you divide 100 lah. So 20% of net profit will be paid out as a dividend payout or as a dividend. So that's what is meant by dividend payout ratios, as simple as that. So out of the total net profit that they earn, how many percent actually they will pay in the form of dividend. So kalau in ringgit, sama lah. You take 200 divided by 1 million. So you get a 20 cents. So every 1 ringgit investment, you get 20 cent returns. Okay, something like that. Okay, you can use either ringgit as I said or in percentage. Both can explain the analysis at the bottom here. So that's number 3, dividend payout ratio. By the way, kalau you tak faham, just let me know. I will go straight just, but we have 3 more ratios to go under the market ratios. Number 4, dividend yield. Dividend yield. Okay, known as current yield, as it measures the current rate of returns. Okay, per share basis from their investment. Okay, so for this, okay, unfortunately, we cannot simply knock off per share basis because market price memang per share basis. We don't have a total market price. Just like kalau earning per share, meaning we can use net profits as a whole. Okay, dividend also the same. We can use dividend as a whole as compared to dividend per share. But for this part, okay, even though we had this dividend per share tadi, we dah ada these amounts, but we cannot use dividend as a whole in order to calculate dividend yield. We need to find dividend per share first, because market price per share, this is what we have in the market. We just have market price per share. We don't have market price as in total values. So therefore, if the below part is per share basis, automatically the numerator part we need to use per share basis as well. So we cannot use dividend alone, right? So dividend per share, if you remember, is from our second formula, ini tadi, dividend per share. Okay, so you need to find this first and then divide by the market price. Again, this is where we need additional information. Sorry. So where to get this price per share basis? Okay, so when we talk about your assignment, it will not be listed in your balance sheet, obviously not in your income statement as well. Okay, you need to basically find it online. Okay, nowadays everything's online, right? So you have a lot of platforms, okay, to choose from. Okay, maybe I can share a few with me. Sekejap, Okay. These are among the place where you can find historical price. Okay, besides you Google je sebenarnya, just type, I don't know, let's say ni letak dua forma biotech. So you want to find dua forma biotech punya share price as at a certain date. Okay, you boleh tengok kat sini. Ni slide lah, nak cari dates yang mana you nak check. Okay, so first we have the star business, just like what I think we've discussed, but I shared with you also kat dalam page ni. Ni agak technical lah because you're using chart here, right? Or alternatively, you can use ni the star business market watch, or you can use morningstar.com, for example. Okay, morningstar.com. Again, we have prices kat sini according to the dates, right? So let's say you are calculating for one company ended December 2020 kan. So you just scroll to December 2020, like so. Then ada close price kat situ 21.40. So use the close see kat sini December 2020, use close 21.40 as your market price per share. Okay, for this company, Petronas Dagangan, for example, if you do Petronas Dagangan lah. So you can find your companies here, you search kat sini. Right? Or as simple as you Google lah. Google, just put your keywords as your name of the company, share price, and then bagi dates, okay, and year. And then they can guide you lah at the multiple portals to look at. Okay, so these are the two examples that you can find. So don't find market price in your income statement or the balance sheet, tak ada. Right? So you need to use additional information. So that's why again, during the final exam, we don't have this. Okay, dia boleh je bagi you the price per share in the question, but usually because they don't have in balance sheet income statement, so we cannot calculate this part. So that's how you find the price per share punya information. So dividend yield, the answer will be in percentage. So meaning you have to multiply with 100 at the end here. And again, the higher the better. The higher the ratio, the better for the investor, because from the market price, we know how much actually the dividend. Okay, so the higher the amount of dividend as compared to the price, the high indicates the higher the earning lah from your point of view. Okay, that's number 4. Number 5, book value per share. Okay, book value, we are looking from accounting point of view. When we talk about book value, it's actually based on the reports. What would be the common equity, the shareholders' equity, how much the value. And then we divide again with NOSO, number of shares outstanding. Okay, number of shares outstanding. So for this, the answer will be in ringgit again. Okay, and lastly, PE ratio. So this is another very popular ratio, PE ratio, price earning ratio. So here the formula is price, name pun price earning PE. So the first part is the market price. Okay, and the earning parts can be measured with the earning per share. Since our market price is per share basis again, so our other information must be based on per share basis as well. So meaning the earning, the net profit, we have to divide by number of shares outstanding to get per share basis. Right? So for PE ratio, there are two school of thoughts or two different meanings. It can be good and bad depending on situations. Alright, so from investors' point of view, we want PE ratio to be as high as possible. Okay, but from those who want to invest, just to invest, we want it to be as low as possible. So what does it mean? When the ratio is high, PE ratio is high, it indicates that the market price is overvalued. I'm not sure. I know you are either you haven't learned about investment yet, or will never have a chance to learn about investment in the future. But when we talk about overvalued, okay, it represents two meanings for two different group of people. Okay, first category, shareholders. Okay, people who already invested. Okay, second is potential investor. So what's the difference between number 1 and number 2? Number 1 is already invested, meaning they already have the share. Number 2, they haven't bought it yet. Okay, they are just a potential investor. They are contemplating to invest or not, for example. So what's the different meaning of PE ratio for them? For shareholders, okay, because they are already the shareholders, they want their their PE ratio to be as high as possible, because high ratio indicates overvalued. When overvalued, meaning it is a good time for them to sell in order to get high profits. Okay, right, so that's shareholders, they want it to be as high as possible. Okay, but for potential investor, they will not purchase during overvalued because it's expensive. When we talk about overvalued, usually it refers to the price is expensive, okay, as compared to the earnings, right? So for potential investor, they want it to be as low as possible, right? So for potential investor, they want it to be undervalued, which is as low as possible. Okay, but for you guys, what you need to do is to report whether it's overvalued or not. So you don't care about your shareholders ke tak. So when you look at the ratios, you compare between A and B, for example. So whichever higher, then you can say that this is more overvalued as compared to the other one. All right. So now let's talk about the assignment that you have to do. Not task one. Task one, I think very clear. I tak ingat bila deadline tomorrow to this is to go. I can't remember. 31st got set. But anyway, task one, very straightforward. What you need just to submit the Excel, okay, with all, I can't remember how many items I want. 6 maybe, yeah. We have total assets, total liabilities, the equity, and then the tax, the net profit. Just a few. I think up to 6 items good. And list as much as possible. Don't hantar satu company je for 2 years or 2 companies. Find as many as possible, but must be GLCs only. Okay, government linked companies only. So that's task one. Very straightforward. No analysis, no calculation, just the figures. Right, now we move on to the assignment part. Okay, the group assignment juga lah. So it's basically the same thing. You have already your task one as your group kan. So for your assignment, okay, this is basically the expansion maybe. You already, have your companies listed, GLCs. But for the assignment too, I'm not limiting yourself to GLCs. You can choose any companies, in fact, but must be the same industry. So since you already selected your industry, we have 10 groups. I listed 10 industries, kan? I don't want any group with the same industry. All must be different one. So you can bring that concept to our assignment. Okay, so assignment what you need to do, basically choose 2 companies only. 2 companies, kan? Based on the question, 2 companies only, right? And I'm not sure, I pun tak ingat soalan tu. I didn't prepare the question. I pun tak check again whether they specify any specific ratios that you need to calculate. You need to calculate all ratios, and not all ratios, all categories of ratios, and then justify the performance. Right? Mana cerita pasal apa tadi ya? Yeah, so you need to choose 2 companies from the same industry. Okay, to make it clear lah, let's look. Right, that's one. Or 30th tomorrow, 5 p.m. tomorrow. So for the assignment 1. Okay, so you already your group 4. Kalau tak cukup, I don't mind 5. But not everyone must have 5. Your basic must be 4. Okay, unless you have odd 1 member tak cukup, then you can be 5 lah. But technically, everyone should have 4 only in a group. Okay, you need to choose 2 companies from the similar industry. So I've listed 10 just now, ataupun last week. You can follow that industry. Okay, complete set of annual reports for 2 years. I know some of the companies, we don't have 2020 yet. Okay, so if you don't have 2020, use 2019 and 2018. Right, so that's one thing. Okay, but if one company you use 2019 and 2018, automatically the other company you need to use 2019 and 18 as well. Okay, even though let's say that company already have 2020. Meaning one company has, another one don't have, katakan. So you need to have a similar time frame. And obviously need me to approve it. Okay. So this will buat some background statistics, the name of the company and whatnot. Organizational context. Okay, need some executive summary lah, what are the companies all about. And these are the performance, okay, liquidity, operating profits. So you need to understand how is your organization financing in this asset. So this is about leverage. So ni ROE. So you kena baca lah ni. And this question relates to the ratios. So I mentioned about market share, operating expenses and whatnot. Okay, complicated, not complicated lah. You need to understand lah every elements here to answer the specific parts. And then give, obviously at the end, obviously you will start, yeah, executive summary, some introductions, the content of analysis, always finish it off with conclusion and recommendations, right? And the allocation of marks, 15% for reports and 5% for presentation. So both written and video must be submitted deadline day 21st of May. Okay, so long way to go, but you can already prepare for this, right? Okay, so in the notes, okay, there's an example you can refer to and then you can compare how the answers look like this. Okay, how to get this current asset, current liabilities with the answers. So current asset kat sini, current liabilities here, then calculate all the ratios with answers lah for your reference. Okay, but on top of this, we've done the exercise also, right? The one that I use just now, this part. Okay, I use this one also for the illustration purposes just now. Okay, to calculate the 8 ratios and compare. And on top of that, I might calculate as well before some ratios, which is more than what we had here. Right. To summarize, okay, this topic, the financial statement and the ratio analysis, the types of analysis. Okay, you will see there are 3 types of analysis. Okay, the 3 types. The first one is known as trend analysis. Okay, trend analysis, also known as vertical analysis, and on top of that, also known as time series analysis. So what does it mean of trend analysis? Simply, you choose one company and you analyze it multiple years, hence the name time series. Okay, a multiple time. Okay, one company, multiple years. Okay, so that is trend analysis. Okay, so measure performance of one company's performance over time, and you should have at least 3 to 5 years data. I'm not sure, the soalan ni agak simple lah, because again, I didn't prepare the question. They just ask you to do 3 years. So for me, kalau I akan suruh you cari 3 years at least. Okay, so you're lucky lah, just to 2 years. And from this, we can see lah whether the company improving or not from time punya performance. Okay, it can be improved or declined, or it can be remain standard lah, ataupun remain constant throughout the time, 3 years, for example. Okay, so that's one trend analysis. Number 2, comparative analysis. So one very easy example of comparative that what we've done in the example just now, whereby we compare against industry average. Okay, so that is an example of comparative. We compare one company against the other company, or a reference, which is industry average. Okay, so for comparative analysis, it's also known as horizontal or sectional analysis. Okay, so for this comparative analysis, we measure the firm's performance against either industry average, just like what we've done in the exercise, or other similar companies within the same time frame. So meaning more than one company. And company, but usually for 1 year only. Okay, so for example, we compare two banks, okay, two banks in the for the year to 2019, for example. So that's comparative. Or like what we've done in this one. In this one. So this is again comparative. You compare for this company, Sunrise Corporation, for the year 2017 against the industry average for the same year. Okay, one against one. Multiple against one, but for 1 year. So that's comparative. Right. Okay, but the best of all is actually the third types of ratio, which is combined analysis. So for combined analysis, also known as hybrid analysis, whereby we combine time series and comparative. Okay, we combine trend and comparative, meaning more than one company, more than 1 year. Kalau tadi, first, one company, multiple years. Second, multiple companies, 1 year. Or kalau combine, it's multiple companies, multiple year. Okay, so the one for the assignment is actually this one, combined analysis. But you are lucky we are using just minimum. When I said multiple, the question asks you to find only two. And when we said multiple years, the question asks you for 2 years as well. So very minimum for combined analysis. 2 years of data for two companies. Okay. Again, because I am buat kan, so for me, kalau I might ask more, so you are lucky lah. Semua orang lain yang buat so very minimum. Kalau since you have 4 kan, kalau I would ask you all 4 one company. Okay, but again, to be fair to every other groups juga, so yeah, they use 2 companies here, right? And you have more time sampai May, so don't wait until last minute baru nak buat lah. You can start now actually. And obviously, there will always be limitations when we talk about financial or economic analysis. Nothing is perfect, all right? So for ratios also, we have various limitations. Number one, limited comparability, especially for companies yang too diverse. Okay, when the company is too diverse, whereby they have a lot of sub companies or subsidiaries in that particular company, sometimes it is very difficult to compare one company against the other. Okay, because of too diverse. Very simple. If we talk about in Malaysia, we have companies yang kita panggil conglomerate companies. So when we talk about conglomerate, this company has a lot of businesses under their wings. Okay, so in Malaysia we have companies like, usually conglomerate ni pun kebanyakannya GLCs lah, right? We have company like the RB Hicom, for example. Okay, very diverse companies lah. So under the RB Hicom, they have a lot of subsidiaries. Okay, the RB Hicom you can associate with automotive. They have Proton and the RB Hicom. Okay, for example, Puspacom, okay, somehow related dengan automotive. They have banks in the RB Hicom. Okay, dah ada automotive, dia ada bank kat dalam ni. They have bank, just one bank lah. Bank Muamalat, for example. What else? For the RB Hicom, they have logistics. Post Malaysia. Post Malaysia is part of the RB Hicom as well. So imagine ada automotive, ada bank, ada apa? Logistic company. What else? They involved with waste management. They have Alam Flora inside that. Okay, how to find a company for the RB Hicom lah. Kalau you nak compare against the RB Hicom as a parent company, what kind of company yang ada semua ni sama as the RB Hicom? It's quite difficult lah, if they have to diversify. So if you want to compare, you can go down to their subsidiaries. So meaning, instead of looking at the RB Hicom as a parent group, kalau nak buat comparison, you can go down lah. Okay, kalau nak go logistic, okay, compare Post Malaysia against another logistic company. I don't know, DHL, for example. So Kalau you nak compare from parent company, it's quite difficult because of this limited comparability. Because if the company belongs to a very diversified companies, right? Number two, different accounting treatment. So this is basically quite difficult if you compare companies from different country. Okay, from different country. So that's why in your assignment, please choose a company that registered or established in Malaysia, right? So some company memang is a international companies. For example lah, I'd say company international. I don't know, Sony katakan. I'm not sure Sony listed ke tak, but let's say lah Sony. Okay. Make sure when you take Sony Malaysia lah, don't take Sony Japan tu. Right? Because you cannot compare Sony Japan versus Malaysia ada Panasonic contohnya. Bukan Panasonic tu lah, Panasonic for example. So because we have different accounting treatments as compared to Japanese company for example. Because one items in Malaysia might treat differently in another company ataupun not another company, another country. Okay, so sometimes that we have limitation if we want to compare performance based on financial ratios from two different countries because of this reason, different accounting treatments. Okay, ratios are tools of quantitative. Okay, everything revolve around numbers, right? And we totally ignore the qualitative aspects of it. Okay, for example, the skills kita tak tengok, the experience of the managers. Okay, so we totally ignore that. Okay, so we cannot compare for the qualitative aspects. We cannot conclude from the qualitative aspects. Right, so because all are involved quantitative only. Number 4, okay, ratios might give you false result if you use wrong information, wrong data. It's simply, kalau you pernah dengar lah, garbage in, garbage out. So you put ataupun you insert wrong information, you akan analyze and give out wrong interpretation. Okay, dia tak boleh detect errors. They cannot detect errors. Some of data analysis later on, if you learn about data analysis, the analysis can detect if there's any error in your data. Okay, but for ratios cannot. Whatever data you put, they can calculate for you. So therefore, if you use false ataupun error, data error, you can give up a error in terms of your interpretation. Okay. Ratios are calculated on the past data, therefore cannot provide complete information for future forecasting. Okay, for ratios, but for because ratio we cannot forecast, but the data too we can use for forecasting. Later kita akan discuss lah. Okay, but for ratios usually we will just based on historical. Okay, historical only, not for forecasting. Okay, and lastly, ratios might be misleading. Again, if they are based on false or window dress accounting information. Okay, again, they quite similar macam number 4, cuma macam number 4 tadi, you yang salah ambil data. Meaning, the data from the financial report tu betul, tapi you pick different ataupun wrong information. But here, number 6, they provide you ataupun they manipulate the data and present it differently. Okay, so they might try to manipulate the data to indicate that they have less debt, for example. Okay, so that's number 6 lah, limitation. So with that, I think it's the end of our topic number 2 lah. Topic number 2, which is the financial statements and also the ratio analysis. Okay, my plan tadi sebenarnya nak buat 2 topik, but I think kita tak sempat lah. So we end today with topic number 2 alone. So for next week, right, we will proceed with topic 3. Topic 3, we have cash flow and financial planning, right? So here under this topic, we have 3 things. Ada 3 statements that we need to prepare. I'm not sure whether we can finish everything in one go. We try to finish as many as possible. We have first part is about cash flow statements. Second part, financial planning ni dari 2 lagi. We have cash budget and also pro forma. Okay, so cash flow, the first part, and then we have cash budget, this part, and then we have the pro forma. So we have 3 things in this topic. Okay, so let's wait for next week lah. For sure, first one at least one for sure we'll finish one. Cuma all 3 within 2-3 hours. I'm not sure whether we can finish everything in one go. Let's see how next week. Any questions? Okay, by now I think everyone knows I dah share last week. The videos, you can refer to the link in my guru tu in the web conferencing. I dah share but yeah. Okay, in my guru, in your web conferencing ni, just go to your group ni, where you sign in or record your attendance tu. Right, so these are the link for the videos. Okay, so for today belum lagi lah. Later I will upload here, so you can look at the past videos from week 1 until week 3 here, and for today week 4 you can refer it later lah. Okay, so everything will be here. No more in the learning material. I will not upload or share here. Okay, last time I letak kat sini ada recorded session. I didn't upload here anymore. Yeah, in fact I dah upload notes pun dah sampai topic 7 so far we just finished topic 2. So many things to go lah. Okay, so thank you very much for your time, and you can refer to the videos for the recorded sessions later for your revision. If you missed or didn't understand any parts, just refer back to the videos, or else you can go back to me to ask any questions. No problem. You have my numbers. We have the group's phone. So yeah, thanks again, and I'll see you guys next week.
Thank you, Doctor.
Thank you,
Right,
Doctor.
welcome.
Thank you, Doctor.
Okay.
Thank you, Doctor.
Okay, welcome.
Thank you, Doctor.